Hey everyone, welcome. In my previous video, I have done a review for my OCBC RoboInvest income portfolio, and today I'll be reviewing my Asia DigiPortfolio in DBS. Firstly, to access DBS DigiPortfolio, you'll need its bank account and its mobile app. Once you're logged in, just head over to the Invest section, where you'll find a range of wealth products. Then, tap into DigiPortfolio, where you can see a variety of portfolio themes available for you. As explained previously, robo-advisors are becoming popular for a good reason. They offer a simple, safe, and passive way to invest without having to micromanage transactions, especially if you're into low-effort and long-term investing. Now I will review my Asia Level 4 portfolio. You may ask, why should I choose this portfolio? If you think that the US stock market is overvalued, this portfolio choice could be a viable option worth considering. Although this portfolio consists of ETFs, note that level 4 represents one of the highest risk levels. Another thing to note is that for this managed portfolio, there is a 0.75% annual flat management fee, and all dividends are reinvested instead of paid out. If you look at the performance graph, the fluctuation is quite volatile, and for those who pay attention to the China or Hong Kong market will recognize this spike here, due to the run-up and pullback of the Chinese stocks. Now, let's dive into the makeup of this portfolio. 74% in equities or stocks. 23% in fixed income or bonds. And the rest is in cash for flexibility. In addition, the portfolio gets automatically rebalanced every quarter to balance risks, similar to OCBC's RoboInvest. Here's a quick look at the key ETFs in this portfolio. First, we have the Nikko AM Singapore STI ETF, 7%, which tracks the Singapore stock market. A potential downside here is that nearly half of this ETF is made up of the top 3 local banks, DBS, OCBC, and UOB. However, if you believe in the long-term strength of Singapore's banking sector, this ETF could be appealing. Next up is the Lion OCBC Securities Hang Seng Tech ETF, 8%, which focuses on Hong Kong's technology sector. Alongside it, we have the Xtrackers MSCI China UCITS ETF, 17%. These two ETFs contain some undervalued Chinese stocks that might be set for a rebound, as we've seen some recent gains in their performance charts. The iShares MSCI India Climate Transition ETF, 15%, is another key part of this portfolio, offering exposure to a diverse range of Indian equities. This ETF has shown strong performance over the past years. Then we have the Lion Phillip S REIT ETF, 13%, which is grounded in Singaporean REITs, offering steady income through property investments in Singapore. The CSOP CGSCI MBE FTSE Asia Pacific Low Carbon Index ETF, 14%, rounds out the equity side, providing a basket of Asian stocks with a focus on lower carbon emissions. Balancing the portfolio, 23% is allocated to fixed income funds, including the ABF Singapore Bond Index Fund and the Nikko AM Investment Grade Corporate Bond ETF. These add some stability, though I won't go into details here. Overall, I like the diversity of this portfolio, which is well spread across China, Hong Kong, and India, with a focus on sustainability. While there are some downsides, such as limited options for dividend payouts and a management fee of 0.75% per year, which is still lower than OCBC's RoboInvest, I'm comfortable holding this portfolio for another 3 to 5 years to see if the Asian markets can outshine the US. If you found this review helpful, don't forget to share and view through my links below and drop a comment if you have any questions. Thanks in advance.